Well, good evening. We're here for session 3 of Chart and Trade. We spent the first week really like kind of getting ourselves just kind of getting a little idea for charting, what charting was all about. Spent a little more time in week 2 talking about charting, and then we went into options basics last week. This week, we're going to continue a little bit more of options basics, and we're going into the introduction to our first strategy. I sure hope that you are following the emails that I send and or doing the videos that I put in the Chart and Trade Facebook group, because those are the places that are laying the foundation for when we come in here. Okay, you already know, if you watch a little bit, there is a lot of information to do with there's a lot of information that has to do with options, right? There's a whole lot that has to do with options. And there is no way that I could literally, honestly, in 6 weeks, if I talked, 3 or 4 hours and once a week for 6 weeks, there would still be stuff to do in options, right? This options education, which is why we talked about this at the beginning. Options education is definitely a consistent learning thing. You're not going to get it all quickly. Well, some things you may get quicker than others, but it is going to require that you spend time with this material. There's no way around that. Okay, there's absolutely no way around it. Okay, so if you're thinking you know, you don't even think, because there's no way around it. Don't even think there's a way, because there's not. Okay, I'm glad you're doing okay, Ricky. I'm having trouble with audio. What's the trouble with the audio? Can you not hear me? What's that? What's happening with the audio? Miss Melba, tell me what's going on. Okay, so let's move forward. All right, don't forget our disclaimer. I'm not a financial advisor. I'm just a regular old girl who talks about the stock market. I know a little bit more than some and a little bit less than others, and I'm just here to share what I do know. The stock market is not easy to predict. There will be losses. There will be things that won't go right. There will be things that you won't learn till you do it. That's the way it goes. Won't be you. I'm not responsible for any losses. I'm not responsible really for any wins. Alrighty, it's definitely going to come but you're clicking your own buttons. You are the CEO of your own portfolio. Okay? CEO of your own portfolio. I saw this today, and when I saw this today, it really hit home for what we're doing here. I saw it based on a different, learning thing I was in, but it was so relevant, and I figured I would share it with us here. Level 1 of learning is unconscious incompetence. Basically is you don't know what you don't know. Some people didn't have any no knowledge about options, no knowledge sometimes even about the stock market. It was a whole nother part of the world that you didn't have any clue about, right? I was in that same space. All I knew about stocks and options was whatever they talked about at my job about, put your money in your 401k. I didn't necessarily know. I mean, I kind of thought they did stocks with it, but it was a whole lot of information I didn't know. Unconscious incompetent. Basically, I'm incompetent. I was incompetent in an area and was not conscious of it. A little bit of time passes, a little bit of knowledge comes in, and then you get to conscious incompetence, which means I realize what I don't know. I realize I want to know more about this. I don't know enough about this, but I'm at least conscious of the fact that I don't know, but I'd like to know. Okay. Then as you continue to learn the skills, you go to level 3. Level 3 says, I've got a conscious competence, which means I've learned the skills, but applying them takes effort. Like I've learned how to chart, but in order to chart, I have to really concentrate on support is start here, go down, start here, go up for resistance. I have to put energy into how do I find a gap? How do I locate a gap? Yada, yada. That's conscious competence. You're doing the skills, but it still takes a lot of effort and thought and prep and planning, right? And then level 4 is unconscious competence, which is where you can do something and not even think about it. It becomes second nature. I feel like that with, if you've been driving for any length of time, you're probably at the unconscious competence as it pertains to driving. Most of us can drive and don't even realize how we got home. It just kind of happens second nature. But when you first started driving, when you were 15, 16, 12, like me, I started early. You had to be, thinking about push the buttons, put your foot on the brake, move the gear into the shift, adjust the mirrors, look behind you. You had to do all that. It was you could do it, but you had to be conscious of it. It wasn't just happening. There are a lot of us, well, several of us. I won't say a lot because I don't really know where everybody is, but there are people who are here among us who are at level 1, who are at. Well, I think everybody who's here now is at least at level 2. Nobody's really here still at level 1 because now you at least realize there's a lot of stuff you don't know, right? That's really where many people are level 2 and level 3. A lot of us are level 2 and level 3. 4 is a place where we've got more mastery, and you could have mastery in one area and not mastery in another, all right? And just know that this is a continuum of learning, and it is okay. It's okay. Just long as you continue to move through the levels, you're in good shape. Okay, I was wanting to do the check-in. Have you watched the videos? If you watch the videos, the 2 videos I gave you for this week, if you watch those 2 videos, put me a 1 in the chat. If you watched the 2 videos, put me a 1 in the chat. If you did not watch them, please put a 2 there. Please put just be honest and put you a 2 there. I didn't watch them. I meant to. I started, but I didn't finish. Those are all 2s. Okay, those are all 2s. Oh, I see a lot of 1s. Yay, yay, yay. See a lot of 1s. Now there's information that's there. If there's some clarifications, I'm going to tell you this is where seem to be the only one, and me and a couple others are the ones that are communicating inside of that Facebook group. That Facebook group was created completely for chart and trade. It is the place where you ask your questions. It is the place where you get clarifications, not just of me, but of the community. I'm not the only one there. There's a whole community of folks who are there who are at various levels of knowledge. If you've got questions, this is the place. If you got a chart, you're like, I'm looking at this chart, what do y'all think? Or I'm looking at this particular trade, wondering what to do. What do y'all think? That's the place. That group is designed for engagement. All right. It was designed for engagement. So feel free. I see a couple 2s there. People who said they didn't watch. I didn't watch the videos. Well, thank y'all got to do better. People who said they didn't watch the videos, y'all got to do better. Okay. Today we're going to talk about options basics, and we're going to talk about cash secure puts a little bit. We're going to hit cash secure puts, and we're going to talk a little bit more about options basics, which is what we started last week. And the video that I gave you, the videos were about selling and buying, right? I want to talk about the brokerage requirements because I don't think we got deeper into what is required in order for you to start to do some of this trading. Almost everybody now, I know we talked on first week, maybe the week before the kickoff session, we talked about you needed a brokerage account. And many of you said most of you said you already had a brokerage account. There was a couple people who did not, but they were going to open one. If you have one or opened one, either way, you need to know that you have to have to be able to trade options. That doesn't automatically come with it. All right. To be able to trade options doesn't automatically come with it. Will the group chat be available after the class? Which group chat? The chat from this Zoom right here? Only if you get the recordings, I guess. I don't think the chat comes without the recordings, but if you get recordings, then yes. Speaking of recordings, if you are not getting recordings yet and you know you want to get replays, you need to head on over to educatortotrader.com and sign up for the replays or sign up for the membership. Either way, you can do the replays for $97 and get all the replays of the main sessions, or you can sign up in the membership and be able to get the replays and be able to come to all the extra stuff. We have extra stuff. We do a after party. After this session, we do an after party where we can engage. The microphones are open. People can ask their questions, all those good things. And then on Saturday morning, we also have a session, an hour of power. It lasts an hour, hour and a half, whichever amount of time we need it to be. And if you're in the membership, or VIP membership, membership, of course, would be cheaper. You can come to those sessions. Okay. All righty. So let me go back to this. Brokerage account requirements. You must be able to trade options. You need to check to see if you got an options level. Anytime you open a brokerage, it automatically comes with the ability to trade shares, to buy shares, to sell shares. That automatically comes with it. But if you want to be able to do options, you need to go a little deeper and get your options and get the options done. All right. You need to go and sign up for options or request options, whatever. So when you're when you're desiring to do options, they're going to ask you some questions. When you say, I would like to be able to trade options, they're going to ask you some questions. They're going to ask you questions like, what is your net worth? What is your knowledge level? What kind of, like liquid assets do you have? They're going to ask you some questions about yourself. So just know they don't necessarily, I'll say they don't necessarily care. They're more so looking out for themselves. So, do with that information what you will. But you need to have the level you need to have a margin account. I have that here. You need to have a margin account. And you must have the option level for spreads. If you'd like to go to spreads, which after I teach it, you're probably going to want to do spreads. So if there's a situation where you really want or need some guidance there, then let's talk about it. We can talk offline. I'm not going to record all the stuff that needs to be you can do to make sure you get the right level. But that's something we can talk about. But you're going to need to be able to trade options. You need the approval for options. You need to have a margin account, not just, a regular. Many people have cash account and margin. If you got Thinkorswim, you can have both. Some people have their IRA they're trading in. The IRA can be a margin account. That's no problem. But when you're in your IRA trading, you can't pull that money out unless you want to face tax implications or you're at the age where it doesn't impact you. If you have just a regular margin account, then, it's, susceptible to whatever taxes go with that. And that's up to you, what you decide you're going to choose. All right. And you must have the option level for spreads, which I think Thinkorswim, that may be a level 2. And for TradeStation, it might be 3, but that may be backwards. But you need more than a level 1. All right. You need more than a level 1 if you're going to, what is a margin account and what is an option spread? So a margin account is the account that allows you to be able to utilize the margin money from the broker. If you have a margin account, generally you might have heard the phrase margin call. Somebody says, I had a margin call. So that means if you have a certain amount of money in your account, the broker will give you 3 times or 4 times your money to be able to trade with. So that means if you want to do more things than what your money allows, the broker will lend you money on margin. But margin accounts are required in order to do selling related things, unless you're going to secure it with your cash. And we'll talk a little more about that as we go. But you need to have a margin account if you're going to do selling. If you're going to do selling or spreads. Spreads is credit spreads and debit spreads. That's what I mean by spreads. Vertical spreads. If anybody has seen that list that I put out every week on my Facebook and where other social media areas, if you see that list, those are all credit spreads. But to have credit spreads, debit spreads, those kind of things, you need to have a margin account to do that. Okay. 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 Got that. Again, if there's more questions, then let's either talk with me, send me an inbox, or let's talk in that Facebook group so that every other people can also see the questions and the answers as well. Okay. Now we talk a little bit about buying and selling, what direction we're looking at when we're buying and selling. Okay, so last week we mentioned some things about buying and selling. If you're going to buy a call, if you're buying a call, you're expecting the price to rise. If you're buying a call, you're expecting the price to rise. If you're buying a put, you're expecting the price to fall. Buying a call, you're expecting price to go up. Buying a put, expecting price to go down. When you're selling a call, which is the opposite of buying one, you're expecting the price to go down or stay flat. If you're selling a put, you're expecting price to stay flat or to go up. Okay, this may feel a little confusing now, but as you get deeper into it, it may not be as confusing. If you're somebody who's already been a buyer, if you've already been buying options, selling is the exact opposite. If you're somebody who hasn't been buying options, if you're new to options, then just consider the selling piece. I'm going to take us down the selling path, okay? Our little trading cheat sheet, I made a copy. I need to put it inside of the inside of your Facebook group, because I gave these two graphics will go there, okay? When you're buying a call or selling a put, you're expecting the price to go up. When you buy a put or sell a call, you're expecting the price to go down. Okay, these are graphics that will show back up again later. Come on, baby. I turned on Thinkorswim, and of course, turning on Thinkorswim slows it all down. Selling versus buying options. When you're opening and closing a contract, we talked about contracts last week. Oh, let me ask this question here. Who looked around their option chain, pushed some buttons, checked to see what was going on in their, paper account or their SIM? Put me a 1 in the chat if you did some looking around inside of your brokerage in the option chain. You looked around in the option chain, then put me a 1. If you did not, please put me a 2. If you're like, I didn't do that either, put me a 2 in the chat. Okay. One of the things that's going to happen as you're learning this is you're going to have to push buttons. And push buttons when you don't have your real money on the line, but push buttons. You're going to have to click and look around and see, what does this do and what does that do? Okay. I see a lot of 1s. I don't see any 2s. You can be honest. Okay. This is a safe space, as they say. This is a safe space. All right. Contracts. We talked about contracts, strike prices. I do see some 2s. Contracts, strike prices, expiration dates, all those things are going to be found in the option chain. And that's going to be found inside of your broker account. You can watch videos, and watching videos, I always bring my option chain up and see you can see where I'm going and what I'm clicking. That's another way to do it. Just watch what I do, and then you go and click it too. Yep, Melba said I played with the tutorial. That'll work. All right. So when you're opening, anytime you are creating or starting a new contract, when you're creating or starting a new contract, you are opening. That's called opening. You can buy to open, or you can sell to open. Buy to open or sell to open. What we do here is we sell to open more than we buy to open, but you can do both, right? And when you're closing it, anytime you're ending a contract, then you're closing it, right? I think we can understand this terminology. When you're at a business, when you first get there, you open it. And at the end of the day, you close it. That's the same concept, right? Okay. So you can sell to close. So if you buy to open, you're going to sell to close. If you sell to open, you're going to buy to close. You're doing the opposite of what you did to open. So if you bought and open, you're going to sell to close. If you do a sale to open, you're going to have to buy to close it. Or for a good thing, either one of these can expire on their own. Sometimes you may not want it to expire depending on if you're in the money or not. And that's a different level of discussion. But in the money, we're in the money. Okay. Come on, change the screen. Why should you be a seller? We talked about buying versus selling. In our community, I'm a seller coach. I teach the selling options. And why should you be a seller? Well, when you're selling, you're almost like the house. Do we have any gamblers in here? I surely hope we don't have too many. I don't know. Stock marketing feels gambling-ish a lot to me. But if we have any gamblers, you know, the house always wins. No matter how much money they give away, they're going to be the ones who are going to keep the most of it. The lottery, no matter how much money they give away, they're going to end up ahead, right? That's the way that goes. When you're a seller, you're like the house, or you're like the lottery people, right? You are going to be in more situations than not, you've got the opportunity to profit. There's more ways to win when you're a seller. To win these trades, you can win in 3 situations. If the price moves in your desired direction, so if you're thinking the price is going to go up and it does go up, then you're going to win that trade. If the price doesn't go anywhere, if it just sits wherever it was when you entered the trade, then you're going to win your trade that way too. Even if price moves back towards your strike some, but doesn't go past your strike, you're still going to win. There's 3 opportunities to win when you're a seller. When you're a buyer, though, if you're buying calls and you're expecting price to go up, the price has to go up. It has to keep moving. Otherwise, if it just sits still, you're losing money. If you're buying puts, which means you're expecting price to go down, if the price doesn't go down, or if it go down some and just sit there, you're losing money. Unlike selling, the price can move a little bit, move no bits. It's fine. You can still be winning. As long as it doesn't come back past your strike, then you are in a winning situation. 3 ways to win when you are a seller. 3 ways to win when you're a seller. When you're a seller, you're going to collect money when you enter the trade. When you're a buyer, you got to pay to play. You got to pay to play. But when you're a seller, you enter those trades and they give you money. They give you money right when you enter those trades. This is good. I like to be paid to play instead of having to pay to play. That works for me. When you find your desired strike, you receive your premiums immediately after entering this trade. As soon as you sell to open, the money is given to you right away. You keep this money when you win the trade. As long as the trade expires, out of the money, you will keep the money that you were given on entry. Or you can buy your way out. Let's say you sell for $20, you sell to open and you get a premium of $20 and it goes down to $5 and you buy back at $5. Well, if you sold for $20 and you pay $5, that means the $15 is yours to keep. If you sold something for $20 and then went and bought again for $5, then you're the one who kept the profits of the $15. That's the way that works. As a seller, that's the process for the sellers. That's the process for the sellers. Come on, go ahead and click and there we go. Ooh, Okay, let's talk about our first strategy. Cash secure puts. Has anybody ever heard of selling puts? If you've heard of selling puts, put me a 1 in the chat. If you've never heard of selling puts, put me a 2. I'm going to get some new numbers here in a minute. You've heard of selling puts, give me a 1. If you have not, give me a 2. I see a lot of 1s. Okay, Elaine says nope, she hasn't. Miss Melba hasn't. Okay, selling puts. See a bunch of things there. So let's talk about what selling puts is and what it includes. Selling puts is probably, I would say it is. Selling puts is the simplest of the option selling strategies. And not only is it the simplest, I call it a no-lose strategy, as you see on that first line. I call it no-lose because you're going to get something, no matter how this trade plays out, you're going to get something. All right? It's a bullish or a neutral strategy. Bullish means you're expecting price to go up. You're expecting price to go up when you are selling cash secure puts. It's either bullish or neutral. So it's either going up or it's staying flat. Both of those, fine with us. No-lose strategy, because when you enter this trade, you receive premiums. When you enter the trade, you get premiums. When the trade is over, you either keep your premiums. If it ends, out of the money, you keep your premiums, or you have premiums and 100 shares. I'm leaving here with something. You're leaving here with something. You collect the premium when you enter the trade, which is your max profit. So you enter these trades, you get a premium. The trade does its thing. If the price stays above your strike price that you pick, then you get to keep your premiums. If price goes below your strike price and you're still in the trade at expiration, then they're going to give you 100 shares. Remember, every options contract includes 100 shares. Every options contract includes 100 shares. This strategy is used when people want to acquire shares at a desired price, right? Or to generate income. Some people just use it to generate income. They don't plan on getting the shares. They don't want to get the shares. They just want to get income off of it that can be used for either or both of these methods. Here is the star here. This strategy should be used only on stocks that you want to own, or at least you don't mind owning. This is a strategy that you do on stocks that you really like. I'm going to do an example on SoFi, right? So y'all know SoFi is my darling. So I'm going to do an example on SoFi. That's a stock that many people would like to own. This is where you would do it. Now, if there's something else that maybe you're like, if I don't really want that stock, then don't use puts on it, right? Don't use puts on something, on a stock. Don't sell puts on something if the stock is not something you wouldn't mind owning, right? The opportunity for you to own it is not high, but it's there. It's not high, but it's there. So if you end up with these shares, you want it to be something you want. When do we want to sell puts? We want to sell puts when we want to acquire some shares at a lower price than they are currently. Because if you wanted 100 shares at the current price, you could just buy them where they are. You sell puts if you want to buy the stock when it's lower, right? You sell puts when you want to capitalize off of bullish movement as a seller. Bullish movement meaning going up. When you want to capitalize off of some upwards movement as a seller, that's when you sell puts. Okay, you do cash secured puts. Why do you think we call them cash secured puts? They're called cash secured puts because your cash is what secures this trade. Your collateral is what secures this trade. Now, cash secure puts can be done in a cash account, as long as the money that you need for the trade is in that same account. You can do this in a cash account. Remember, I was talking about needing a margin account. You can do cash secure puts in a cash account as long as the cash is in that account. How do we sell puts? You're basically going to select the strike that's at or below your current price, at or below the current price of the stock. Remember, strike price is on our option chain. This is the piece that's important. How much does it cost to do these trades? People always want to know, how much is it going to cost to do these strategies? Well, the collateral required is the strike price times 100 because we're talking about 100 shares. Strike price times 100. So if we're talking about SoFi, for example, and you want to use the 15 strike, I think SoFi is at 15.30 or something. It closed today. Let's say you decided you wanted to do the 15 strike. You're like, I'll do strike of 15, right? I'm willing. What this says is, I'm willing, if the price closes below my 15 by expiration, I'm willing to take on 100 shares at $15 each. That's why I said pick the strike price at the place you wouldn't mind owning the share, at the price you wouldn't mind owning the share. The 15 strike times the 100, I told you that because it's 100 shares in there, times 100 is $1,500. This is the collateral requirement for one contract of SoFi at the 15 strike. Of course, if we have a stock that has, if we pick the 6 strike on a stock, yep, let's say we pick the 6 strike, then we're going to multiply that times 100, and the collateral required will be $600. Now, collateral required is the broker is going to just block away that buying power. They're not going to take the money. They're going to block away that buying power until the trade is done. This is where that margin money can sometimes come in handy, right? You got enough in there, but if you want to be able to do these kind of trades that you say, okay, they're going to block away $600 of my buying power until this trade is turned off. If you got a 15 strike, $1,500. Of course, we can go from here. 12 strike, multiply times 100. That particular one is going to require $1,200. So if you say, okay, well, I like this concept, but I want to do it on something that's, what's Palantir is what, $64? Palantir somewhere up there. I'm not actually sure where Palantir is today. That might be at 68. Anyway, that's not the point. 64 is your strike price you're looking at. You say, okay, I want to sell puts at the 64 strike price. Multiply that times 100. The broker is going to block away 6,400 of your collateral. That's how cash secure puts, that's the money of the cash secure puts. Okay, it's whatever strike price you select times 100. Is that clear to all the folks? That clear? If that's not clear, give me a 3. Okay, so you don't need to own the shares to sell the open, to open the cash secure puts. You just need the cash in your account. Yes. Yes. Selling puts means you just need the cash to secure it. Right? You don't need the shares. That's covered calls. We're going to get to that in our next session. Okay. I see there's a 3. So selling puts. Selling puts, it's an upwards movement. You believe the price is going to go up or it's going to stay flat. You say, I want to, sell puts on, I'm going to use SoFi again. If you want to sell puts on SoFi, maybe you say, okay, I'm going to sell puts on SoFi and I'm willing to pay $14 per share, or I want to pay $14 per share for them. It's at 15 and some change, but you're thinking maybe they'll come back down to $14 and I can get me 100 shares. You pick the 14 strike. The 14 strike in the option chain. You're going to have to multiply that times the 100 shares. $14 is what I'm willing to pay per share times 100 shares means the collateral the broker is going to require from me is $1,400. 14 times 100. That means the broker is going to take my buying power like a deposit. They're going to hold my money like they do you if you are going to rent you a car. They block off some of your credit card money until you bring their car back. This is the same situation. They're saying, okay, while this trade is running, we're going to keep this $1,400 off to the side. And the reason they do that is that if the trade expires and the price is less than $14 and you're still in the trade, they're going to use this $14 to buy the shares and give them to you. Okay, they're going to use the shares and they're going to use that money and give you the shares. All right. Thank you. Stephanie said the rental car deposit is a great analogy. Yep. The broker is blocking away your deposit money like at the rental car place. Or when you get hotels, they block off another $100 for incidentals, they say. Speaking of which, I'm not going to talk about how Chicago wants you to pay to park at the hotel that you're sleeping at. Why am I paying to park at the hotel that I'm sleeping in? Chicago, do better. I was so shocked about that. I was like, what? I'm already paying to stay here. All right. Focus, Arlissa, focus. So you win the trade if the price stays above your strike at expiration. Again, this can be done in a cash account. As long as the price is above that 14, if you had the 14 strike and price closes, expires on Friday above 14, if your trade is still open, then you get to keep the premiums. You keep the premiums that you earned when, or that you got when you first entered the trade. We're going to do an example. You'll be able to see a little bit closer what I'm talking about. If price expires below your strike, so let's say we had the 14 strike, right? If the price expires below your 14 and you're still in the trade, then 100 shares will be put into your account at the $14 price. At $14, this is an at symbol, $14 per share. Okay, because that's the strike price you selected, and you were saying, if I stay here and the price is below 14, I'm willing to receive these shares for $14 a piece. Adrian says the same in DC. The hotels definitely get you coming and going. Charlene said they do it in LA too. What? No free parking in Chicago. Now you come to Florida, y'all need to move to Florida. You come to Florida, if you stay at the hotel, you don't have to pay to park there. Ah, la, la. Okay. So that's what happens with your with cash secure puts. All right. If price stays above your strike, you get to keep the premiums that you took in at the beginning. If the price expires and it's below your strike price, you're going to be put the shares. They're going to give you the shares, which is not a bad thing, because after that, what you do is the covered calls, which a few questions are coming up about whether or not you have to have the shares. Once you get these 100, if you were to get these 100 shares, then you sell covered calls against those. Basically, you have another selling strategy to help you capitalize off your asset of your 100 shares. Okay, because the 100 shares are an asset. Options contracts are not assets. Shares are assets. That means you at least are part owner of the company. An options contract doesn't mean you own shiggity. You don't own nothing but a piece of paper, an electronic piece of paper. That's all you own. Okay. The pros to selling puts. There's some pluses, right? It's very passive. And I say it's very passive because, Tawana said some places in Florida, probably depending on where you are. Oh, downtown Miami, that may be true. In Orlando, there might be some, but okay, I'm gonna stay on track. So it's very passive, and it's very passive from the standpoint of once you enter these trades, you really can let them run to expiration. Right? You can let it run for expiration to say, okay, if it expires above my strike, they're going to release my buying power, right? That 1,400 that they had blocked away, they're going to give it back to you. You won't lose that money if your trade expires out of the money. And then your money is back with you, and you keep the premiums that you had. If the price expires below your strike price, the broker is going to use that $1,400 to buy the shares with, and they're going to put the 100 shares in your account. All right. So that there's nothing really for you to do as long as you're trading or you're selling puts on a stock that you'd like to own. There's nothing for you to do but let it do its thing. Okay. There are immediate profits. As soon as you enter this trade, the broker gives you money. The broker, because you're selling something. When you sell something, you get paid to sell it, right? Yeah. And it can be used for weekly income. You pick a good solid stock that you have some conviction about, you can make a weekly income off that stock, either with selling the puts, and if you receive the shares, then you can sell covered calls. You're still generating a weekly income. Okay, you win in all situations except one. And the reason I say you win in all except one, the only situation this still is a no lose, but I would call it a little less of a win, is if you decide, for example, you're going to do SoFi for the $14, but then SoFi falls off the map and it drops down to $5, right? And you are still in that trade when it expires. Then you're going to receive the shares for $14, but they're now worth $5. Right? So you still have the shares. They just aren't worth close to where you you got in. So where you would, in this case, this is why I'm going to reiterate once again, when you're selling cash secure puts, that you sell them against a stock that you want to own, that you have longer term conviction about, that you'd like to be able to do, even if it's nothing more but running the, cover calls, yada, yada. You think it's something that you can continue to make money off of. Those are the stocks you want to use for this. Okay. What if you don't want the shares? What do you do? Okay, so if you're getting to expiration and you see that the price may be below your strike price, but you don't want the shares, you can buy to close. You can buy to close the trade before expiration. And expiration happens at 4 o'clock, right? You can buy to close before expiration. So as long as you buy your way back out of it before 4 o'clock, then you will not get any shares. The shares are not placed on you until after hours. So if your trade is closed after hours, there's nothing for them to give you. You have to buy your way back out. Once you buy to close it, the broker still gives you your buying power back and you go on about your way. You don't have to sit idly by and receive the shares if you don't want them. If you did it for income and it didn't do what you wanted to do, then you can buy to close the trade and keep it pushing. Okay, as my daughter would say, keep it pushing. Go on to the next stock or go to a different strike price. There's things that you can do there. All righty. Good question. That was a good question. Mama Net. Thank you, Jamie. I will let you continue to answer in the chat too. There's drawbacks, some cons to selling puts. I talked about this. If the stock tanks, you can kind of be left holding the bag. You're still going to have the shares, but you're going to have the shares at a lower price. This happened to me and Jamie a while back. We owned some shares of Zim, or we were selling puts against Zim. I think it was Zim. We were selling puts. Was it Zim or was another one? There was a different one. Anyway, somebody that had a really good dividend. And after the dividend was over, we were still selling puts, but everybody who was holding those shares, after they got their dividend money, they all started selling and the price went shoom, 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 shoom. We looked up the next morning, our little junk was way down there. We were like, what in the world happened? So we ended up with shares that were not worth what we had paid for them. We still had the shares. You could hold on to them for a minute, or you can just sell them. You could hold on because shares don't have an expiration date. So you can hold shares as long as you need to. You can hold them forever if you'd like. And they may recover back. If you got some shares of something that you had some conviction or you still have long-term conviction, again, they're still an asset, but we ended up holding the bag. So we had to, I ended up selling mine. I think Jamie did too. We sold our shares and said, this ain't something I wanted to keep, but that was a lesson to me to not sell puts against something I really didn't want. I didn't really want them, so I shouldn't have really been selling puts against them. I didn't really want them. But you still have an asset here. Another drawback to selling puts is they can require a lot of capital. Like I was just saying, if you're looking at a 60 strike, if you're looking at a stock that's, about $60, a 60 strike is going to require $6,000 of collateral. $6,000 of collateral or your buying power your broker is going to block away that buying power from you in the amount of $6,000. So if you like $100 stock, $100 stock, right? If you're going to multiply that times the 100, 1 0 0 and 2 more zeros, that means you put up $10,000 of collateral for each contract that you're doing on $100 stock. Okay, so selling puts can be expensive. Okay, using a lot more buying power. But I will tell you this. Big money, when I say big money, brokers, hedge funds, not ETFs, maybe ETFs, the people who got a bunch of money, they're selling puts. Warren Buffett sells puts. They're expensive, but it is a much safer way to trade than buying. Okay, this is how Warren Buffett and company end up acquiring a bunch of shares on companies that when the price drops, they end up with the shares at a lower price, especially if it's a good solid company and it climbs back up. I mean, think about people who ended up with shares of Palantir by selling puts at $14. Palantir is at 68, almost $70 right now. If anybody were to receive 100 shares at $14 and continue to keep them and hold them, they 3, 4, 5, 6 times their money. Okay, Stephanie says, can you teach me what happens when you sell a put and the stock price goes down towards your put? Does the put's value go up or down prior to expiration? So the closer the stock price comes to your put, the higher the premiums go. So the more expensive it gets. So anytime the regular price gets in proximity to your strike, the price is going to be more. So if you're going to buy your way out, you're going to have to spend probably going to spend more money than you received in premiums. You're going to spend more than you got in order to get out, if you want to get out that way. Another good question. Can you put a stop on cash secure puts? Absolutely. Absolutely. You can say, okay, I received $20. I'm just pulling a number out. I received $20 here. And if it gets up to $40, then buy my way out. Yes, absolutely. You can buy your way right back out. Oh, Charlene said, I got Palantir at $8 and change. I sure hope you're still holding it. I had Palantir at 14. It's been a couple years now. When we first started trading, I was doing leaps and I owned Palantir way back then, and Palantir was dropping and dancing. This was maybe 2, 3 years ago. Okay. Is there a penalty for closing early? Nope, no penalty. As Jamie said, or Elaine says, not besides fees. Yep. No penalty except fees. Yeah, I do. I have 105 shares and sold 30. Go, okay, you still got some of them. That's great. That's the asset. The shares are the asset, right? Okay, so we talked about the pros. We talked about the cons of selling puts. Okay, here's some steps. Here's some steps. You want to pick a stock that you want to or you don't mind owning that fits into your budget. Two things, right? You need to have the buying power available, and you want to pick a stock that you don't mind owning. I like SoFi. SoFi is a $15, $16 stock right now. I personally have good long-term vibes as it pertains to SoFi. So to sell puts on SoFi for $1,500 a week, not so bad. Not so bad at all. Now, that's just me. There's other stocks that are in the 15 and 20 and $30 range that are good, solid stocks that you might want to sell sell puts against. I've been on cover calls. It's been on my mind a lot recently. Or if a stock that's $60 and the 60 strike is fine with you and fit your buying power monies. Some of y'all got some big accounts and you should be using that money. Those big accounts aren't do you any good if they're just sitting there and not making you any money. Use that collateral. All right, use that collateral in a very safe way. I'm not saying be reckless, okay? But if you got money just sitting there and it's not growing, it needs to be working for you. Let your money work like a employee, right? Pick a stock that you want or don't mind owning that fits into your budget. Chart your support levels. We spent some time in week 1 talking about how do we chart support, right? And you want to pick a strike price below that support where you're willing to pay for the shares. Below support, and you're willing to pay that price for the shares. You put it below the support because your expectation is that the price won't go down there unless you really want the shares. And if you really want the shares, then you pick a strike where you okay with paying for the shares. That took a long time to fill, and I need that back. Okay. If you're thinking about where would I find the stocks? Like, which stock would I look at? What stocks would I use, right? Where could I go find what I'm looking for? You can go to barchart.com. Barchart is a free resource, barchart.com. It does have a subscription if you want all the bells and whistles, or you can go to their main page for free. Select options from the menu. I'm going to show a graphic in a second. Select options from the menu. Select naked puts. Naked puts basically means you're not covering it with anything. Again, the first page is free. This first page gives you current price, the strike. They tell you which strike to choose. You don't have to pick that one, but they definitely suggest one. They tell you how much you're going to make in premiums if you use theirs. Expiration date, they suggest, and a BE, which was the break-even price, the volume, open interest, the implied volatility, and the delta. I know a lot of these words are things y'all don't know, but all of this is given to you on this bar chart screen. I'd suggest selecting the stock to make sure it's a buy or a strong buy. So if you're in bar chart, you can click on the stock and see that it's a buy or a strong buy. I'm going to see if I can get bar chart open. Maybe we can look at it real time. But this is what the screen looks like inside of bar chart. Okay, we're in barchart.com. Anybody ever use bar chart? If you've used bar chart, put me a one in the comments. Anybody ever use bar chart? I see some ones. Carolyn says no. Tanya, we've got a few people who've said yes, yes, and yes. Okay. I see some ones. Good job. Good job. If you haven't, we're going to walk through. I see a couple no's. Okay. Bar chart is where they've got several. I'm going to show you here real quick. I got it open. I have to go there, but we're looking for options. You're selecting naked puts. And then these are the stocks that are there. This is an older graphic, but the information is still the same. You've got the stock symbol, the current price of that stock when they ran the screener. What strike are they suggesting you pick? You don't have to pick it. They're suggesting it. Expiration date, they suggest. The bid, which is the bid price, is how much you're going to potentially make as premiums. Break even percent, the volume, open interest, delta, and implied volatility. Okay, I'm going to change screens, or I'm actually not going to change. So I'm going to pull this to the other screen so that way we can see it. This is bar chart on, this is it live in living color. Charlene said, never heard of it. Don't know how to use all the features though. Yeah, there's lots of features on here. If you pay for it, I don't want to say it's $199 a year, maybe a little more, but it's got a lot of stuff and it kind of has a lot of. But if you are going to use it, of course, it's worth it. I think for what they offer, $199 is a good price. But I know when I had it, I paid the $199 1 year and I didn't use it anywhere near enough. So I released it, right? This is their main page. Hope everybody can see that. This is the main page. If I make it a little bigger, okay. If you're up here, they've got a drop down for stocks. You can see all these different things talking about different stocks, top stocks to own, top signal strength, top signal direction, market momentum. They got, and if you pick any of these, the first page pops up for free. All right, they give you the first page free. I picked options. If you select options, then you've got all these other things: option screener, long call, long put, covered calls, naked put. That's where we were going, naked put. They got vertical spreads here and other things, iron condors, short calls, short condors, long condors. They've got all kinds of straddles and strangles, butterflies. They got the different things, right? Let's go select naked put. That's what we're talking about today, is the naked puts. Same thing as cash secure puts. They're naked. We're securing them with our cash. And so this ran, it says Tuesday, November 26th. Here, I think down here, it's going to tell us like exactly when it was run. Nope, we don't want this. And then it populates with what they're suggesting, what could be suggestions. Now, of course, if you want more control over what the screener shows you, then you're going to need to be a member. They won't let you put any filters and all that good stuff when you're just using the freebie. None of that. But on the first page, you've got, some of these things, micro strategies here. We've heard of that one. Clean Spark is here. That's $12.50. I'm a fan of Clean Spark. QUBT, I think, is that the quantum mechanics one? Quantum physics, quantum computing? That might be that one. DJT is 30. I don't do that one. Mara's 24. GameStop. GameStop is at $30. What? When did GameStop get to be $30? Jamie, did you know that? MicroStrategies here is SMCI is a $34 stock. Right? Clean Spark, Beyond Meats, BTBT, which is in the semiconductor space, is $3.50. All right. When I was saying to click on the stock to see whether it says buy or not, I'm going to pick MicroStrategy. If I hit this plus next to it, Then it brings it up, and under opinion, what is your opinion? So it brings up the stuff. I'm not sure if y'all can see that. I'll try to make it a little bigger. There we go. Under opinion, which is just the opinion of the brokers that are there, it's a strong buy. MicroStrategy is a strong buy according to the opinion of the folks or advisors who are here in bar chart. Let's say if we were looking at, what I'd say with CleanSpark here, right? We would $12.50 is the price of CleanSpark. If we're looking at what is the opinion of the analysts, what's the opinion? It's a weak sale, right? It's a weak sale. They're like, well, you maybe should, you see here, medium term indicators is a 50%, short term says hold, medium term says sell it, long term says sell it, overall average is a weak sale. Right? This is, you pick that plus next to it. I'm picking, let's do SMCI, last one. SMCI is a $34 stock. We want to see what is the opinion of it. It's a strong sale. Ooh, Super Micro Computers, that's a strong sale. A strong sale, something you don't want to use. It's not bullish. Bullish means it's a buy, got a buy rating. So the whole thing, if you're going to sell puts, you want the price to sit flat or to go up. If it's got a rating of a strong sale, it's probably not going to sit flat or start going up. It's probably going to be going down. Okay, BTBT, you want something that's going up like that. The first one I picked was MicroStrategy, right? This is Bit Digital. I think this falls in the crypto space. It's a strong buy. BTBT is a $3.74 stock. So if you were going to sell puts against it, you could sell puts for $3, right? Maybe you could pick the $3 or the 3.5 strike, and that's going to be either $300 or $350 of collateral. Okay? Y'all with me on that? Everybody understand where we are? All right. This is bar chart. There's all kind of stuff is in bar chart. Like I said, there's all kinds of stuff. If you want ETFs, there's all kind of things. If you want bar chart, you're going to have to go and kind of tinker around with it. Again, it's free. The first page of bar chart is free. Whatever you pick, the first page is free. All right. This is some good stuff. You're welcome, Brandon. Are you going to talk about IV and how it affects strike price? No, I'm not. See that? I'm not going to. I'm not. High IV is basically where there's a lot of implied volatility. Generally, the premiums are higher when the IV is higher. That's about as far as I'm gonna go with that. If you really want to know more about implied volatility, you go look, do a YouTube search and let somebody get you real technical on implied volatility. I could, but I'm not on this call. Just know if the IV is high, that means the premiums are high. And the volatility, it's implied volatility. So it's doing this right here. It could be moving. But the good thing for sellers is if you do a high IV stock, you're going to make more in premium. So sellers actually like high IV stocks because we pull in more premiums. You want high IV going in the direction you want it to be going. That's what you want with that. Okay, now we're going to go do one. Well, come on. Okay, maybe not. I didn't move it. I thought I was moving it. It didn't move. There we go. There we go. Okay, let's go look at, I'm going to take us back to SoFi as I talked. We'll probably go look at BTBT too because it's a lower price. We could look at the other one that was a strong buy was MicroStrategy, and that's expensive. Okay, this is, oh my goodness, I was about to have a panic attack. Okay, so this is SoFi from, I'm in on demand. So if you have Thinkorswim, I got somebody trying to come in. Jamie, will you let the person in who's in the waiting room? This is SoFi from August. Okay, this is back in August where SoFi was. If you have Thinkorswim, Thinkorswim is in Thinkorswim, you can use what's called on demand. I'm up here in the top right. I'm gonna make this a little bit bigger so that way you all can see it a little bit better. If you're doing on demand, look and feel, it on demand allows you to go back and mimic or replay or repeat the exact setup of what was happening with the stock at that particular day and time. It's a good way to do like back testing or practicing a strategy. You can go and use on demand to do that. I believe I have a video on my YouTube channel about on demand. If you don't know how to use it and you have Thinkorswim, you can go and see what on demand is all about. All right. This is back in the day when SoFi was $6. SoFi was $6. Okay. So what I'm going to do here, I took us back to this time because I wanted to show if you were selling a put, right? First thing I told you was to pick a stock that you had conviction about, which would be SoFi, could be that stock even now for some, right? You want to go and find some support, start at current price and go down to support. Support's going to be down here where it says price level 16, right? That's going to be some support. This was our place. Let me go get my annotation tool in case y'all have forgotten how to find support and resistance. All right, this is our current price that we're looking at. We're going to go from here and we're looking back down to the first place where it went down and reversed. Right, that is $6.31 is where that support is. We've got some touches back here, let you know this is possibly a good support area, several touches that happened. So we want to pick a strike price below support. Below support. So we're going to go, let's go with the 6 strike. We're going to go with a 6 strike. Okay, below support. Yes, SoFi. SoFi, SOFI. Yep. And now this stock is not, it's worth $16 and some change now. 15 and some change. It's not $6 anymore. So, okay, now let's go to the option chain. I'm going up here to where it says trade. Okay, so I'm on the chart. I'm leaving the chart now and I'm going to where it says trade up here at the top. Y'all see my mouse moving? Where it says trade. This opens up the option chain. Opens up the option chain. Let me see if I can clear off the things that are here. Okay. This is August the 12th is the date that we're on. It's August the 12th. So I'm going to pick the next soonest, the next soonest expiration. And we said we like what did we say? The 6th strike. Okay, we said the 6th strike. This was down here when the prices was low, low, low. So the premiums that you pulled in matched how low that was. How low can you go? So we can look at it from here. Where's my pencil? We can look at it from back here, and we can also go look to see what it looks like now. All right. So if we were looking at the 6th strike back here, this is against the stock is worth $6. It ain't gonna do but so much. This right here would not be worth it. Okay, I want to make this real clear. If you're going to leverage, you're gonna pay $2 in fees to the broker. So if all you taking in is $2, no, this is not what we want to do. But we could go out another week. Okay, let's go out another week. Maybe we pull in $7. That ain't a really doable, worth it either. You may have to go one more time. We're at $9. Again, that's it. So I want you to check the mechanics of this, not currently that it's only $9, because I'm talking about when it was a $6 stock. So you can't necessarily expect a whole lot in premiums when the stock is worth $6. All right, $6 and some change. With $6.30, I think it was. Anyway, you would come under the bid column if you were deciding, I like the 6th strike. I'm going to go under the bid column. This is where the sellers hang out, is the bid column. And you would select this, the $9. It says I'm selling a put at the 6 strike. I'm going to collect $9 when I do this. All right, confirm and send. I'm going to show you what it shows you on as far as buying power, blockage, and all that good stuff. Okay, it's going to say, okay, well, give me my mouse. There we go. Looking here, the break-even price is $5.91, which says if the price falls that low, you are at break-even. Your max profit is $9. Even though it says max loss is $5.91, it's not really max loss because you're going to get shares. So you're not, unless the share, the SoFi goes to $0, you're going to get these shares, all right? The cost of the trade is in parentheses, which means they're giving you the money. The buying power impact or buying power effect is $100, even though it would really be that $5.91. But since this isn't a margin account, it's using some of the margin money. So the broker's going to carry some of the weight. I'm going to carry some of the weight. That's what that's going. But if you didn't have enough, to be using the margin money, the broker's going to block away this other $5.91. The broker is going to block away $5.91 while this trade is going. All right. I don't want to save it. I wanted to send it because I wanted you to see what this looks like money-wise as time progresses. We're going to send it. Okay. So if I go back to now the monitor tab, I should be able to see the trade. I should be able to see my SoFi trade here whenever it fills in. There we go. The SoFi trade is here. It says here, I sold. We got a whole line here that shows that I sold a 6 put. One of them, there's 18 days before expiration. I took in $9. 0.09 times 100 is $9. I took in $9. It's currently worth $9 and some change, right? P&L percentage, P&L date is basically we just entered the trade. So it's letting you know what kind of profits do we have. We don't have any real profits as of yet. Don't have any real profits because we just entered the trade. We just entered. All right. Our expiration is August the 30th. So let's go look. We're going to go take ourselves to closer to the 30th. Let's see what happened along the way. This is why I like on demand. You can go ahead and pick the date and the time you want to be at and see, well, let's see what happened. You can test it out. You can enter the trades, exit the trades, see your profits. You can do all that stuff in this on demand. And you can use on demand when the market is closed. Unlike your sim, if you're using a sim, the market has to be open to use your sim. If you're using on demand, you can use on demand anytime. It's like on demand on your DVR. You can play those TV shows anytime. Anytime. Okay, looks like we're paused. Let's see what we got. Okay, now the price of a SoFi is at $7.60-something. Okay, the current price is right here. The current price of SoFi is $7.64. See, the price came up. We started, it was $6.30-something. Over the course of the next 2 weeks, the price went up, right? Our trade price, we took in $9 is what we received in premiums. That was a +9 for us. If we're going to buy it back, it's now worth 0.005, which is, 50 cents. You can't close it for 50 cents. So let's say if we were going to close it, we could close it for $1. That means our profits would be $8. If we were to do it like that, the price has gone up. We're not going to get the shares. We're going to get to keep our premiums. If we close this, the broker's going to release our buying power and we're going to be free to continue to do what we were doing. Right? I'm going to show how we would close it. We would go to the line where the trade is. We're going to right click here, right click, It's going to say create closing order. The top one, create closing order. We're basically going to buy the one SoFi put back because we sold to open. Now we're going to buy to close, and we could buy it back for, let me clear this off so nobody gets something in their way. We're going to buy it back for $1. See, here's green. We're buying it back for $1. Confirm and send. Trade closed. They give us our $600 back. We kept our $8. Go on, go on. Okay. Let's look a little closer at what we would do if what SoFi is doing right now. SoFi is at 1549. We're going to look at the chart and see what would be a good strike. Okay, now it's interaction time from the comments. Based on our chart, let's find our support levels. Can y'all see that? Sorry, I'm moving it around trying to make it bigger. Come on. Here we go. Do we see some support? Stephanie, that's just when I make a line, I left it where there's the writing that shows price level. I had it to show the writing. So if I write things in there like support, resistance, so if I write something in there, then it will show up on the right hand side. That's all that is. Do I use the yearly chart to find support for these puts? No, I use, if I'm trading it for the week, I'm looking for weekly support, maybe monthly, but you know, not really yearly, weekly or monthly if I'm going out several weeks. SoFi leaps have been great. I have a SoFi leap as well. Need to buy some more. Waiting on the pullback. Today might be pullback day. It's in the 15s. It went up as high as 16. So it might be coming into the pullback range. All right. I see Brandon says he sees, let me close this. I have things open that are draining resources. I need all my resources. Okay. A little above 13. I see around 13, 12 something, 13. Okay, we don't see one before that. Good go here. Y'all think there's some support in here? Let's change our style to align and see if we see some support in here. Nope, there's no support. That's all momentum. If you're looking closer, oh, here's some. Here's a support. There's wherever there's a peak or a valley, there could be some, that's a place where price went and turned around. Oh, I didn't want that. I wanted a line. It's going to be something in this area. Okay, then I go back under style, chart type, and turn it back into a candle. Right here, the price went up here and pulled back, went up some more. A support can become resistance. A resistance can become support. This was resistance here. Now, if the price comes back to it, it is support. So that is 14. I'm going to show you what I was talking about, Stephanie. If I double click this line where it says price level 17, that I have it written here. I could put this as support. Let's say I put daily. So if I was writing things on my lines, if I don't write anything in there, it just puts the words price level. Okay. 11 is one. Yep, that's pretty far away. We want to see about support that's close by. So we're thinking, where would we potentially sell puts? All right. Looks like we've got some at 14.14. So let's go look at the option chain to see what about selling some at the 14 strike. 14. How much money are we how much collateral are we having to put up if we pick the 14 strike? In the comments. If we pick the 14 strike, how much money are we going to have to put up? Yes. $1,400, $1,400, right? We pick the 14 strike. Now this is for a couple days from now. So of course there's no money here for 2 days from now. No, right? So now let's go out a little bit further. This week is so low on volume that there's not a lot happening here, right? 14 next week, paying $10. Now you say, well, that ain't no money. That ain't no money. Remember though, you got two things you're using cash secure puts for one of two things, right? You're using it to acquire the stock if you want to acquire it at $14. Maybe you say, I'm fine with acquiring it at $15. So I go to the 15 strike. Like, well, at the 15 strike, it's paying $34. I'm fine. You may be saying, I would be fine with buying it for $15. If that's the case, that means you're going to take in $34 of premium and you're going to utilize $1,500 of collateral. Okay, I'm going to select this. Remember, we're in the bid column. I'm going to select this. You could have picked 14.5 as well, by the way. You don't have to be whole numbers. 14, 14.5, 15. You can check the delta. The delta here is 33 delta, which is a 67% chance that it's going to be down here, that it will expire beyond here, below here. Okay. This is delta of 22 for 14.5, might be a little more, likable. If you didn't want the shares, if you do want the shares, then you're fine with that. You're fine with it coming. You get the premium right away. The broker gives you the money right away. You can do whatever you want to do with it. So we're selling a put against SoFi, 14.5 strike. The price we're going to collect is $19. Okay, so if I was to push confirm and send, it doesn't like that. Why doesn't it like that? I'm not sure. Oh, it says illegal. I wonder why it says that. Oh, maybe. No. Anyway, you would be selling a put against here. $19 is what you're going to receive. The broker is going to block away. If we got 14.5, how much money is the broker going to block away? 14.5 times 100. The broker is going to block up 1,450 of your dollars for each contract. And you're going to take in $19 for each contract. You could say, one is, as you multiply, if you want 2, 3, you want more money for premiums, you're going to have to put up more collateral for your cash secure puts. Okay, that's how that goes. That's the way that goes. All righty. Did we have a, I thought there was SMCI was the one that showed that it had, it was a strong sale. It was a strong sale. All right, let's go here. What questions we got in here? We've been an hour and some change, almost an hour and a half. Tell me what you think about the cash secure put strategy. Tell me what you think about it. As far as a way to either generate income or to get shares. Brandon said it's a win-win, a lot to take in, but good info. Is there an amount you'd want to go for, or you choose the price as an example? I try to go for at least a 10% return. No, take that back. That's a different one. For cash secure puts, I usually try to go for between 2 and 5% of what you put up for collateral. That may mean you need to go out further in weeks. That may mean that. It may mean you need to go out further in time. But a good 3% return on that for a week or 2 weeks, 3 weeks is good. That's a good return on that money, especially if it's a stock that you would like to own for cheaper or you don't mind owning for cheaper. Okay. Ricky said, no question, taking it all in. It's starting to come together for me. Good job. I like it. It's a good way to get shares. Yep, a good way to get shares. I asked all my questions, said Stephanie, this has been great. I'm making money on the puts, and I'm grateful for learning this lifelong money making skill. Absolutely. Absolutely. Yes, it's starting to make sense. Okay. I want to make sure that I give some homework. I'm going to put some Cash Secure Puts videos up because I want you to watch the Cash Secure Puts videos to make sure see what it's all about. Okay. So I will get the $19 plus more if it goes in my favor. No, ma'am. You're only going to get the $19. When you're a seller, you get whatever you sell it for. It's like if you decide you're going to sell a pair of shoes, and you're going to sell them for $10, you can't go back to the person and say, I think I want $10 more. No, whatever you sell them for is what you're getting. That's your max profit. Okay, that's your max profit. Yeah, you don't get to go back and ask the shoe people for more money. All righty. Okay, I'm going to wrap us up. And for those who are following me over, the VIP or the members who are following me over, we're going to go over there probably, I'm thinking about 5 minutes. We can make it over to the new, to a new link. And that link is in the Telegram group. All right. I'm going to upload this. For those who have replays, you can look for that email to come in replays. If you do not have the replays, but you know you want to watch some replays, then you need to go to educatortotrader.com and either pay for the replays or join the membership. Replays are $97. Membership is $97. Membership for $97 allows you to come to these extra sessions. If all you pay for is replays, then that's all you're going to get. If you pay for the membership, you get to come in and do all the membership stuff, which is access to me, coming to all the sessions, hanging out in our Telegram group to trade together during the day. Yeah. Okay, all that goes with that. All righty. I will bid you all a fond farewell. I want you, if we don't see you, we will be on tomorrow morning with our morning call. E2T Morning Show will be on YouTube live at 9:20 tomorrow morning. We're going to definitely want to have a good green day, right? We'll see you then. Otherwise, I want you to have a good Thanksgiving, and we'll see you Sunday night. Because I'll be back live on YouTube on Sunday night. Actually, we'll be back on Friday. I think we're back Friday and then Sunday. I'm trying to make the week be over, right? All righty. Everybody have a good evening. Those who are VIP or members, you can meet me at the other link in about 5 minutos. All right. Goodbye, everyone. Y'all have a happy Thanksgiving. Don't eat too much, even though no calories count during Thanksgiving. It's a free for all. All right. Bye, y'all.